Ikatan Akuntan Indonesia, Akuntan Profesional Unggul, Indonesia Maju. Ikatan Akuntan Indonesia, IAI, telah berkiprah mendukung pembangunan SDM dan transformasi ekonomi Indonesia.
Akuntan memiliki peran penting dalam pembangunan nasional yang berkesinambungan.
Profesi akuntan mendukung upaya peningkatan profesionalisme SDM Indonesia agar bisa optimal berkarya mendukung pembangunan ekonomi yang efisien dan transparan. Melalui Prakarsa 6.1 yang telah ditetapkan sebagai program umum Dewan Pengurus Nasional IAI periode 2018-2022, IAI siap berkarya mengawal perekonomian bangsa ini menuju Indonesia Emas 2045.
Saya sangat mendukung rencana IAI untuk mempercepat program sertifikasi agar para akuntan di negara kita memiliki kreativitas, inovasi, keterampilan, dan memiliki daya saing, dan sekali lagi dalam rangka mendukung pengembangan ekosistem kita yang lebih akuntabel, lebih efisien, goal-oriented, dan inovatif.
Tanggung jawab itu terwujud melalui Chartered Accountant Indonesia sebagai identitas akuntan profesional Indonesia dan telah mendapat pengakuan kualitas secara global. Prakarsa 6.1 berisi 6 langkah aksi dengan satu tujuan strategis untuk memperkuat peran IAI dalam meningkatkan kepercayaan masyarakat terhadap entitas bisnis dan publik dengan menyiapkan akuntan profesional berintegritas siap menghadapi masa depan. IAI melaksanakan tugas dan tanggung jawabnya menyusun standar akuntansi keuangan dan standar profesi, melaksanakan ujian sertifikasi, serta aktivitas keprofesian lain mengacu kepada International Federation of Accountants dan Chartered Accountant Worldwide. IAI for Society dijalankan untuk memberikan manfaat yang semakin besar bagi masyarakat serta untuk mendekatkan profesi kepada publik. Founding Fathers IAI telah menetapkan 2 tujuan pendirian IAI. IAI dibangun untuk mempertinggi mutu pendidikan akuntan dan meningkatkan kualitas pekerjaan akuntan Indonesia. IAI menguasai perubahan, menyiapkan masa depan.
Your business is a living thing, growing and evolving based on the decisions you make, the directions you take. Chartered accountants have the breadth of skills, commitment to ethics, and global expertise to help your business thrive. We are uniquely experienced to make a difference to your world. Choose a difference maker. Choose a chartered accountant.
Gabung Brevet Pajak IAI, pilihan tepat untuk Anda. Pelatihan Brevet IAI, ahli pajak, bedah substansi, temukan solusi. Kenapa memilih IAI? Modul yang selalu update dan materi yang dilengkapi dengan pembahasan studi kasus komprehensif. Instruktur yang terjaga kompetensinya, berpengalaman, dan tentu saja profesional. Apa aja yang didapat kalau belajar pajak? Sudah pasti, kita jadi tahu seluk-beluk perhitungan pajak. Menjadi kuasa hukum perpajakan mewakili perusahaan, meningkatkan karir dan menunjang profesi. Kalau ingin menjadi konsultan pajak, belajar brevet pajak juga bisa sebagai langkah persiapan USKP. So, banyak kan manfaat belajar brevet pajak? Sebagai benefit tambahan, IAI melaksanakan program kuliah umum perpajakan dengan menghadirkan narasumber dari praktisi dan profesional di bidang perpajakan. IAI juga melaksanakan gathering alumni brevet untuk senantiasa mengupdate informasi perpajakan. Kalian juga tidak perlu bingung, karena IAI menyiapkan berbagai pilihan waktu belajar, jadi dapat disesuaikan dengan kebutuhan. Bagi teman-teman mahasiswa, IAI juga memberikan harga khusus mahasiswa aktif. Selama pandemi, IAI juga tetap hadir dalam pelatihan brevet pajak secara virtual dengan menggunakan platform Microsoft Teams. Hal ini juga memungkinkan untuk dapat diikuti oleh peserta dari seluruh Indonesia. Dan, untuk diketahui, pelatihan brevet pajak terapan IAI juga diperkuat dengan MOU antara IAI dan Direktorat Jenderal Pajak. IAI juga memiliki kompartemen akuntan perpajakan. Yang salah satu kegiatan rutinnya adalah menyelenggarakan regular tax discussion yang mengupas isu perpajakan terkini. Pelatihan brevet IAI hadir di 6 knowledge center di Jabodetabek. IAI Knowledge Center Menteng, Moy, Serpong, Kedoya, Fatmawati, dan Sumarekon, Bekasi. Selain itu, dengan standarisasi nasional, pelatihan brevet IAI juga hadir di beberapa IAI wilayah di Indonesia. Nah, jadi tunggu apa lagi? Ayo segera daftar pelatihan brevet pajak terapan IAI. Pelatihan brevet IAI, ahli pajak, bedah substansi, temukan solusi.
Since the beginning of the 20th century, the average global temperature has risen by 1.5 degrees Celsius. That rise in temperature continues to accelerate. If unchanged, it will eventually become irreversible, and the impact on life across the globe would be catastrophic. In 2015, ICAEW decided it was time for change. We started identifying sustainable ways of running businesses by assessing our own actions and teaching a sustainable mindset to our students, members, and member firms. We were preparing our profession to help protect our planet. In order to achieve a carbon-neutral goal, we needed to know what our footprint was. We measured and disclosed our greenhouse gases. Once armed with that knowledge, we could identify a clear roadmap to reduce our footprint. Our ambitious plan factored in every element of the business. In 2015, we started to take steps such as changing light bulbs and comprehensive recycling to minimize environmental impact. We even reduced travel using video and voice calls. The outcome? A 20% fall in our emissions, and as at Q3 2020, ICAEW is carbon neutral by purchasing offsets against our total remaining footprint. With our initial goals achieved, we can now look to the future. Not only ours, but the future impacts our students, members, and member firms will have on practices and companies across our profession. As a business, we're aiming higher. We don't just want to offset our footprint, we need to make it smaller. We aim to reduce our carbon emissions by another 20% by 2025, doubling that reduction to 40% by 2030. Internal initiatives such as changes in types of boilers, moving to cloud-based servers, and not taking domestic flights will help us achieve this goal. But this isn't just our fight. We all need to act before time runs out. Progress requires commitment and drive from the people at the top and a willingness to invest in real-life change. Start your own carbon-neutral journey by assessing your impact and setting focused targets to help achieve your goal. Remember, if you don't know where you are, you can't see the way forward. You have to know what your footprint is before you can plan to reduce and offset it. For more detailed steps to carbon neutrality, visit icaew.com/carbon neutral.
Assalamualaikum warahmatullahi wabarakatuh. Selamat siang. Good afternoon, ladies and gentlemen, wherever you are. On behalf of the Institute of Chartered Accountants in England and Wales, or ICAEW, and Institute of Indonesia Chartered Accountants, or IAI, it is an absolute pleasure and honor to welcome you on our first joint event in 2022. Discussion on Indonesia carbon tax policy, opportunities and challenges. Ladies and gentlemen, the Indonesia government, through the Harmonized Tax Law, or HPP, passed on the 7th of October 2021, introduces a carbon tax under cap and trade scheme. Starting this month, this policy is enforced on coal-fired power plants and applied in other sectors in 2025. This policy, while applauded by many, also raises a lot of questions as businesses and accountants particularly prepare to directly participate in the effort to reach Indonesia net zero emission goal by 2050. Now, we're sure that a lot of you have a lot of burning questions on this matter. This is why we have invited a great lineup of speakers, not only to share their expertise on the matter, but also to give a global regional, even local insights on one of the most discussed topics of this year, the implementation of carbon tax policy in Indonesia. Now, before we start, I would like to take a couple of minutes to inform you on a couple of housekeeping items on today's event. First, I would like to inform you that today's session will be conducted in English. Today's session will also be broadcasted live from IAI's YouTube channel, so you can definitely rewatch it again after the webinar ends. I would also like to remind all participants to use the Q&A button to ask your questions to the panel. But please be advised that due to time limitation, we might not be able to address all questions. And last but not least, participants will have the opportunity to receive an e-certificate. But please note that we kindly request all participants to fill in an online attendance form, which will be given before the end of today's event. But all participants are also required to choose the right keyword in order for your forms to be valid. So when you're filling up the form, please make sure you pay attention to the keyword that will be given by me towards the end of the event. And on behalf of the co-organizers, ICAEW and IAI, I would also like to thank the ASEAN Federations of Accountants for supporting this event. Before we start with the panel discussion, ladies and gentlemen, allow me to invite Elaine Hong, FCA, ICAEW Regional Director for China and Southeast Asia, to deliver her welcome remarks on behalf of ICAEW. Elaine, the time is yours.
Thank you, Andika. Now, very good afternoon and selamat siang. A warm welcome to everyone who has joined us today. I'm Elaine, as Andika has mentioned, and Regional Director for China and Southeast Asia at ICAEW. Now, before we begin, I would like to thank our speakers for taking the time to participate in today's webinar. And I do beg your pardon if I'm not pronouncing your names correctly. Head of State, Revenue Policy, Center of the Ministry of Finance of the Republic of Indonesia, Ibu Pandai Putu Oka Kusumawardhani. Head of Energy and Sustainability Legal Practice and the EU Green Deal Center of Excellence, EY Poland and USA, Ms. Cassia Luis. Sustainable Finance Program Lead, WWF Indonesia, Ms. Rizkiasari Yudawanita. Director of Trisakti Sustainability Center, Dr. Juniati Gunawan. I would also like to thank Institute Akuntan Indonesia, or the Institute of Indonesia Chartered Accountants, our organizing partner, as well as the ASEAN Federation of Accountants, whose steadfast support have made today's webinar possible. The issue of carbon emission is among the most critical challenge faced by today's world, and action must be taken for systematic change. The ICAEW is committed to achieving the United Nations Sustainable Development Goals, and we are the first major professional body in the world to become carbon neutral. Now, on that note, ICAEW has released its first annual carbon neutral ICAEW report, sharing the progress and plans we've made in our first year of carbon neutrality in November 2021. Now, over the last 5 years, we've implemented initiatives that have reduced our carbon footprint by 20%, with a continuing downward trajectory. In the upcoming decade, as indicated in the video, ICAEW will be implementing several internal carbon reducing projects, which will reduce our emissions by 40% by 2030. Now, our carbon emissions are declared annually through the CDP, formerly the Carbon Disclosure Project, and every 4 years to the UK government's ESOS, or Energy Savings Opportunities Scheme. We also support the Financial Stability Board, or FSB Task Force for Climate-Related Disclosures, and play host to the Capital's Coalition Organization. The Institute has already embedded climate change and sustainability in many modules of our ACA syllabus. And we've recently signed the Green Finance Education Charter, committing us to building a green finance syllabus into our qualifications. Now, it is imperative that businesses today understand the importance of implementing holistic sustainability initiatives in an organization. Now, these initiatives need to be driven at our most senior levels to ensure continuity and success of our sustainability efforts. Now, we know that many across the profession are already setting significant carbon reduction targets and investing heavily to achieve them. We hope that our move to carbon neutrality will encourage others to accelerate their own sustainability agendas. Now, the ICAEW also has a plethora of online resources available on our dedicated climate hub to help organizations in all stages of their journey to carbon neutrality and sustainable business transformation. To achieve change, the level of international cooperation needs to increase significantly and much more rapidly than the decades-long process that has surrounded developments in international corporate taxation. The climate emergency is global and much more urgent than ever. As such, I am pleased that we are partnering the IAI today to delve deeper on the opportunities and challenges as Indonesia, the largest economy in Southeast Asia, prepares to roll out its carbon tax policy. I'm also pleased to announce that ICAEW and IAI are both represented on the B20 Integrity and Compliance Task Force. This provides both institutes the opportunity to contribute our insights and experience to the policy report that will be presented to the G20 at the upcoming B20 Summit in Indonesia at the end of the year. Now, we're certainly looking forward to strengthening our collaboration with IAI and other stakeholders in our accountancy sphere, who are also playing their respective roles to drive this important agenda. There is much to be done to achieve sustainable economic growth, and I look forward to engaging discussions from our speakers shortly. Thank you, and I hope you enjoy the webinar.
Thank you, Elaine. Bapak dan Ibu, I would like now to invite Ibu Eli Zarnihusin CA, Executive Director of IAI, to also deliver her notes on and remarks on behalf of IAI. Ibu Eli, the screen is yours.
Thank you, Andika. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Distinguished ladies and gentlemen, Professor Lindawati Gani, IAI National Council Member, Ms. Elaine Hong, ICAEW Regional Director China and Southeast Asia, all invited speakers, moderator, and attendees, good afternoon from Jakarta, Indonesia. Let us start by expressing our praise and gratitude to the God Almighty for His blessing on today's event. On behalf of IAI, I would like to welcome all of you to this online panel discussion jointly organized by ICAEW and IAI, supported by ASEAN Federation of Accountants. This event brings together reputable national and international experts to discuss and provide insight into a current trending topics in Indonesia, carbon tax. As we are already aware, climate change is an urgent, global, and systemic issue that can threaten the sustainability of organizations, market, and economies. Climate action will require relevant policy initiatives and incentives, consistent and well-considered regulation, robust climate risk assessment, responsive business practices, and high-quality disclosure that advance climate action and adaptation. As part of a global network of more than 3.5 million accountants and 180 professional organizations in 135 countries and jurisdictions under IFAC, where IAI is a member and co-founder, as well as a member of the Chartered Accountant Worldwide, our collective focus and commitment to be part of the global voice on climate action on behalf of the profession. Our discussion today will dive deep into the impact of policy toward Indonesian effort on reducing carbon emission, its opportunities and challenges, and we will also learn from the experience of others with emphasis on accountants and finance professional role in the implementation of this policy. I believe with the capacity of invited speakers today, we will get the most comprehensive talk from many perspectives. And today we also have an early celebration of RA Kartini's Days, since all of our speakers and moderators are women. Distinguished ladies, guests, and gentlemen, carbon tax is regulated by the Indonesian government through the law and harmonized taxation issued last year. Our government considered the need to control greenhouse gas emission in the atmosphere, which causes an increase on the Earth's surface temperature so that it will reduce the risk of climate change. The Indonesian government is committed to reducing greenhouse gas emission by 29% on its own by 2030, in accordance with the Climate Change Convention. I believe in order to achieve a net zero emission target in tackling climate change and maintaining sustainability, a strong and solid sustainable governance is essential. Acknowledging the important role of our profession in this space, we have witnessed how key stakeholders such as IFAC, IOSCO, the IFRS Foundation, B20, OECD, and leaders of the G20 are taking action toward a solution that particularly the accountancy profession can bring. As a response, in November 2021, the IFRS Foundation has announced the initiation to form the International Sustainability Standard Board, which will develop a comprehensive global baseline as a high-quality disclosure standard to meet the needs of investors. Mirroring the IFRS Foundation increasing focus on sustainability, IAI has established the IAI Task Force on Comprehensive Corporate Reporting. The multi-stakeholder task force
in progress.
comprises of representatives of relevant regulators, preparers, and professional accounting organizations. The task force aims to promote and accelerate adoption of a high-quality, globally conformed, and accept sustainability reporting standards. Furthermore, as part of our ongoing journey to build a strong sustainability reporting ecosystem in Indonesia, IAI at our 14th Congress that will be organized on December 15, 2022, will be proposing change to our Articles of Association to accommodate establishment of the Indonesian Sustainability Standard Board. It is an extension of the trust that our government and stakeholders have given to IAI in successfully developing the financial reporting standards in Indonesia. In addition, IAI and also ICAEW is now a member of Task Force Integrity and Compliance B20 and is actively involved in providing strategic input within the framework of the G20 Indonesia presidency in 2022. As part of IAI activities of Task Force Integrity and Compliance B20, IAI together with B20 and IFAC held 3 side events on April, August, and October 2022, aimed at increasing the recognition on commitment of regulators and the business community, including the accounting profession, to promote collaborative engagement in promoting sustainable governance and sustainable reporting to ensure long-term value creation. I would like to take this opportunity to formally express my appreciation to ICAEW for our ongoing cooperation in developing the accounting profession in Indonesia. As fellow Chartered Accountant Worldwide members, IAI and ICAEW jointly build and strengthen the Chartered Accountant brand globally. Both associations are also committed to maintaining the quality of professional accountants to contribute to the economy. We have roles to keep accountants informed of how they can support their organization and client effort to manage and report on climate risk. We have an important role in providing accountants with the training, support, and infrastructure needed to apply their skill to climate change adaptation and reporting. IAI certainly hopes that excellent cooperation with ICAEW will continue in the future, in order to build the Indonesia accounting profession as part of the global accounting community. Distinguished guests, ladies and gentlemen, I would like to close by wishing a successful discussion today. Please don't hesitate to bring forward your point of view and suggestion as a finance and professional accountants to take action to combat climate change and its impact for a prosperous, equitable, and sustainable future. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Thank you, Ibu Eli. Bapak dan Ibu, before we move on to the main event of today, allow me to do a quick photo op with our co-organizer as well as our panels and moderators for today. So, ladies and gentlemen, ICAEW, IAI, Alpha team, Ibu Yuniati, and our panels, I kindly request for you to look at your cameras, smile, turn on your cameras first, of course. Look at your cameras, smile, and we're going to do a quick screenshot. In 3, 2, 1. Okay, and one more time, we'll do a quick screenshot in 3, 2, 1. Okay, brilliant. I think we got everything that we need. Thank you so much, Bapak dan Ibu, for your patience. And I would like to also remind you, as mentioned earlier, you can claim your e-certificate, which will be required by filling in an online form. So please stay tuned until the end of the webinar for you to get the link to the e-certificate. Now, without further ado, I would like to now proceed to the main event of today, which will be led by our moderator, Ibu Yuniati Gunawan, PhD. Ibu Yuniati is the head of Trisakti Sustainability Center. So other than accomplished academician, she's also one of the leading sustainability experts in Indonesia, providing and assisting various listed companies in the preparation of their sustainable reporting. Ibu Yuni recently went on a roadshow with the Indonesia Financial Authority to help educate the general public on the recent green taxonomy issued by OJK. Ibu Yuni, without further ado, please take it from here.
Thank you very much, Pak Andika. So, good morning, good afternoon, good night, everybody, wherever you are. Very most welcome to very interesting discussion today about Indonesia carbon tax policy. So, we would like to discuss what will be the impact of carbon tax policy for Indonesia, the opportunity and the challenge. So we have a very distinguished speakers today. And the first one, I would like to ask Kesia, and then followed by Ibu Kiki, Ibu Rizkia, and then finally, Ibu Oka will also deliver her views about this kind of tax policy in Indonesia. Okay. Ibu Kasia Levis is a partner at EY, leading sustainability legal practices and the EU Green Deal Center of Excellence. She has many years of experiences advising on international regulatory regime related to energy, climate change, and the environment, working at the intersections of law, strategy, and business. Kasia has a double degree in law from Tigalion University and Harvard Law School, where she was awarded Common Fellowship for Academic Excellence. She is a member of the New York Bar. So without further ado, I would like to ask Kasia to present your views.
Thank you very much. Thank you everyone for joining our session today. It's an extreme pleasure for me to speak to such such an honorable audience. So if I could ask for the slides to be pulled up, this will help illustrate the discussion. So as a way to kick us off, I would like to present my and EY's views on the very dynamically developing matrix of international and domestic climate policies. And I believe this will be a really good segue for the discussion into the future policy regime that Indonesia is contemplating and looking into. And hopefully some of the insights that I'll share maybe will help us structure the discussion about lessons learned and how Indonesia could transplant some of the best practices and then avoid some of the pitfalls that were already experienced by the countries that have implemented climate policies in the past. So if we can move to the next slide, and we have only 15 minutes for this introduction, so I'm hoping we can explore any unanswered topics in the Q&A session. So just to start, what we have to realize is that climate policies in general, they have, at this point in time, they have many dimensions. So we can go from purely international or global dimension, regulated under United Nations Framework Convention on Climate Change, UNFCCC, and the spin-off agreements or protocols that operationalize this framework. So the most notable ones are obviously Kyoto Protocol and Paris Agreement. And within this framework, we have the recurring COPs, Conference of the Parties meetings. The last one was held in Glasgow in November of last year. And then we have regional schemes. So the EU emissions trading scheme that I had a pleasure to participate in the designing phase of that system. This is a regional scheme just because the EU is not really a federation. It is an association of 27 individual member states. So we look at it as, sometimes we can say that this is a regional scheme, or sometimes we can say that this is something maybe that is more equivalent to a federal level in countries that are organized as federations. So this example would be good for any country that has federal structure and is contemplating how to balance federal level regulations with the state or province level laws. Then we have the national level. The examples here are the UK emissions trading scheme, or newly launched China emissions trading scheme, or carbon taxes that exist in various member states, EU member states. Then we have subnational layer, for instance, RGGI, Regional Greenhouse Gas Initiative on the East Coast of the United States, or California Cap and Trade. Then California scheme also comes into play when we discuss schemes that are linked. And this is something very interesting because some schemes that look into expanding and making the system more robust economically, they might be contemplating alignment so that they actually can establish linkages. And we have examples of such linkages. For instance, California linked its cap and trade system with Quebec's one, or the EU linked its ETS with the Swiss equivalent. And then on top of that, and I don't know if it's illustrated well on this slide, we have this orange circle, which is intended to depict carbon border adjustment mechanism. So in my opinion, any mature domestic carbon policy system at some point where really the carbon price imposed on domestic producers becomes quite burdensome, which actually means that it's effective, then, these countries will start looking into, well, how can we ensure competitiveness for our domestic manufacturers? And this is the moment in time when they might still thinking about implementing carbon tariffs at the border in connection with imports that do not contain, or imports whose price does not reflect any price for emissions, because that price is just not imposed in the country of origin. And then across these dimensions, we have so-called voluntary carbon market, or markets, because actually we're now looking into this market, again, splitting into several different, sub-markets, if you will. So this is something that I'll touch upon very briefly, but something very, very dynamic that, again, is cutting across these jurisdictional dimensions. And we can move to the next slide. So very, simply in the macroeconomic terms, we have two basic mechanisms for putting a price on carbon. One is through market-based mechanism, emission trading or cap and trade, which basically sets the quantity or the cap of emissions and lets the price thereof fluctuate, because these emission rights or allowances, however they are called in a given system, they are allowed to be freely traded between either only compliance entities or more broadly with other market participants. And then the second approach is carbon tax, which is more familiar in the sense that this is a fiscal instrument that we are all very well accustomed with, and it's simpler because we just set the price and we let the quantity, meaning the amount of emissions, fluctuate, where the companies can decide whether it's worthwhile to emit greenhouse gases and pay for every ton of those emissions. So economists, just focusing on simplicity and certainty, might prefer carbon taxes, just because they're more, they give more foreseeability and in a sort of guaranteed stream of revenues. And it's also easier to collect revenues from carbon taxes because there's a fiscal instrument, so the revenues go directly into the state budget. Whereas with cap and trade, again, because this is here, carbon is a commodity that is being traded between private entities, these revenues might not go to the state budget in as straightforward of a manner. But obviously, in legal and economic scholarship, there has been a lot of discussions of which system is preferable on a number, or taking into consideration a number of indicators or parameters or objectives that we want to accomplish. And the presentation disappeared from my screen. And then also which system would guarantee the best buy-in from the stakeholders. So there are various considerations, ranging from political considerations through, competitiveness of the economy, and then obviously, lastly but not least, which system is the best at ensuring that emissions are actually going down. And maybe the last point here is that these two systems are not mutually exclusive. So we can actually have both coexisting in the same jurisdiction. And I will touch upon it a little bit more when I'm discussing the EU, but this is something to highlight for now. So we can move to the next slide. So while we're waiting, I'll flip it on my screen. So there are key considerations that have to be taken into account when designing any carbon pricing setup, whether this is the ETS or a carbon tax or both. So first, any jurisdiction has to decide whether they're going with one or two or both. And once that decision is made, then we have to get more granular into the details of the carbon pricing system architecture. So definitely we have to consider what to tax. So which industries, and should these only be stationary installations or also, for instance, transportation like aviation or shipping. So this is clearly the decision to be made. And this also connects with point number 4, development of a timeline for this system, because if we select certain industries, and I understand Indonesia is going first with the power generation sector, it doesn't mean that the system will be restricted to this sector. It just means that this sector will be the testing ground, and then the sectoral coverage will be expanded as we progress with the system. And then obviously stationary installations are way easier to capture in terms of their emissions than mobile sources. So this is also something to consider. Then obviously initial tax rate, how it changes over time. If we go with cap and trade, then we should consider whether we want any putting any guardrails around the potential level of the price of the allowances in terms of both price floor and price ceiling, or will we want to just let the price fluctuate fully and be purely determined by the market forces of demand and supply. And another interesting point to consider is around use of offsets. Offsets are basically the means of capturing CO2, whether technologically and then sequestering it or pumping it into the ground, or through so-called natural carbon sinks. So effectively investing in reforestation and other forms of land use change, so that, for instance, soil is better at capturing the CO2 from the atmosphere. So the question is, should we allow in our system to use the offsets to balance the emissions released into the atmosphere? To what extent? Should there be some thresholds? So this is also something to consider. Development of the timeline we already mentioned. Actually, the EU ETS that I'm very familiar with, the first phase was actually called learning by doing. The first 3 years were just the testing ground for the system. So this is also something to consider. Then how to spend the revenues, because obviously this system will impose additional financial burden on a number of industries. So and also potentially if we impose carbon pricing on the power generation sector, just because in many countries this sector is not really, doesn't operate on thin margins. This is, a sector where everyone has to offtake energy. So usually power generation companies are able to pass through a lot of their, or even all of their CO2 cost. So then we have to think how to protect vulnerable consumers, and should we somehow, offer them some form of support in terms of potentially increasing electricity prices. And then also lastly, we have to consider how this climate policy overlaps and interacts and interplays with other policies in the energy and environmental space, just so that we don't have unintended policy outcomes. Okay, and we can move to the next slide. And here, just a little bit more in terms of remarks on the interplay between compliance and voluntary markets. So basically, all that we discussed that I was showing on that first slide was with regard to compliance markets. And then this last remark said, well, across all of that, we have the voluntary market. So really, this picture is right now, I would say, extremely complicated. And very often, clients from the private sector, but even from the public sector, they really get quickly lost in all of this, because now we are just seeing the mushrooming of all of those systems. And now when we add the voluntary market, which is not regulated, it's not governed, it's a purely private initiative driven by the entities that issue the carbon credits on the voluntary market. Now it's just becoming very, very difficult to navigate. So the main takeaway here, and I won't be going through these examples, but the main takeaway here is that it really depends on the regulator how much weight they want to give to the voluntary markets, because some jurisdictions might say, well, we understand that this is a purely private initiative. Any investor can invest in carbon offsetting project, apply to one of the leading credit issuers like Gold Standard, like Vera, which again are purely private entities, get those credits and then use them to offset their own emissions or just sell them. But if such projects are going to be developed in our country, we still want legal framework to govern them. Just so there is more legal certainty and these credits are, have high quality and we will not be implicated in something that might be questionable. So there is also a question setting up the ETS or carbon tax. How much do we want to regulate the voluntary market, and to what extent will allow credits generated by those voluntary markets to be recognized for compliance purposes? And we can move to the next slide. And here, just a quick snapshot of selected emissions trading system schemes from around the world. Just something, in designing any of the domestic ETS, it's always useful to look at the precedents and examples, and again, lessons learned. So I would highly encourage, to take as much inspiration and especially learn from the mistakes in designing Indonesian cap and trade. We have a number of questions, especially in the EU ETS, that we're still considering, was it a good decision? The ETS in the EU has been in place since 2005, so 17 years. So a lot of interesting questions have been posed and answered. I'll give you one example, something that is right now probably the most contentious topic in the EU ETS, is whether it was all along a good plan to let companies that are not compliance entities participate. So pretty much anyone can enter this market and purchase allowances, which led to a lot of speculation and pretty much unavailability of the credits to be purchased by the compliance entities. So something to consider, but every system has its lessons learned. Any comparative analysis, inquiry into these would be highly, I would say, beneficial for any policymaker looking into designing their own system. And we can turn to the next slide. This is more on the potential. So this is obviously, the jury is not fully out in the sense that the market analysts keep revisiting the assumptions and the projections, but these numbers I think are pretty striking. So for compliance carbon markets, we believe that we're looking into a market that would be worth over $1 trillion by the end of the century. And when it comes to the voluntary carbon market, I'm actually, in my opinion, these numbers for 2030 are actually too low. I've seen actually projections that hover around $100 billion by 2030. But in essence, definitely a new market that is booming. And I think in essence, we're looking into new commodity to be globally traded, to be steadily increasing in value over years to come. So I think it is a really good decision for any regulator to, hop on this train and be part of this momentum. Also, what is important here, where we look at these numbers, their magnitude obviously does say or tells us that there will be the whole financial infrastructure built around it. So it won't be just trading carbon credits, but there will be the whole, financial market built around it in terms of securitization and derivatives, etc. So obviously there will need to be strong regulatory oversight over this, just as any financial instrument that is being traded on exchanges, etc. And we can move to the next slide. I don't know how much time we have left. Probably we're nearing the end of the 15 minutes allotted, but this is just a yes. If you could maybe just guide me how, in terms of minutes, how many minutes do we have left?
Okay, you have another 5 minutes.
5 minutes, perfect. Yeah,
Yes.
Yes, perfect. So this is hopefully something we can explore during the Q&A session, and definitely we will not, have time to discuss every possible, design, element of ETS or VCM design. And we'll definitely not exhaust this topic, but this is just maybe to start the discussion a little bit. So for instance, my insights when we were thinking about the designing exercise would be, well, I mentioned participation of non-compliance entities, number 6. Definitely pilot testing is very important. The EU ETS was actually launched before the proper data collection. For instance, California took 3 years just to collect the data from the compliance entities, and this was definitely time well spent to establish the actual, to get visibility into what the actual emissions are and what's realistic in terms of cap and how the cap should be declining. Then, and I'm a little bit picking and choosing, but number 9, legal certainty, definition of credits. That's something very important, both for the compliance market and for the DCM. If any country would want to do one thing when it comes to the DCMs, I would definitely encourage them to look into developing a legal definition of what those credits are, because from my experience, investors are really looking into a country that would give them legal certainty into what actually they're developing and acquiring. So this would be a very important first step, and then perhaps developing the entire suite of regulations around what constitutes good quality credits. Then the buy-in piece I mentioned, eligibility for CBAM reduction. That's an interesting one, because the EU is actually progressing with its own carbon border adjustment mechanism as the first jurisdiction in the world. And an interesting point here is that, for instance, if Indonesia has climate policies in place, so anyone who exports into the EU will already have to pay carbon price in Indonesia. To that extent, any price paid domestically will be deducted from this carbon tariff, from CBAM. So absolutely, this is a consideration. Any cap and trade design should be at least aligned with what CBAM deduction would require or would implicate, because obviously the last thing you would want is to have your manufacturer pay twice, once in Indonesia and then secondly in the EU as they export the goods, because, for instance, the climate policy wouldn't be considered robust enough by the EU. So I think that's pretty much it when it comes to key points. We can again discuss them in more detail during the Q&A. And we can move to the next slide. Yeah, so this is just to illustrate, how complex this landscape is in the EU. And this goes back to the point on the overlapping policies. So in the EU, centrally, like we said, we have the EU emissions trading scheme, but then around it we have a number of I would say complementary policies. So we have the EU taxation directive that also imposes additional cost on fossil fuels and gives tax preferences to carbon-free or carbon-neutral fuels. Then we have carbon taxes in individual member states, and this is the point that I wanted to make earlier. Is that the way it works is that member states member states can set up a parallel carbon tax that actually would even impose this tax on the same industries that are covered by the ETS, just because the ETS is not considered to be a fiscal instrument. But actually, no one does it that way. So usually what the countries do, they, for instance, say, well, the companies will have to pay that tax if the price of the CO2 in the ETS is below a certain threshold. Then you have to pay the difference. So for instance, the Netherlands imposed the price of 125 euros by 2030. So if by then the one price of EU allowance does not reach that threshold, the companies will have to pay the difference. For some countries, they apply carbon tax to sectors that are not covered by the ETS. So that's another possibility. Then maybe one remark, because we don't have time to go into that, but then there is the interplay between Article 6 of Paris Agreement, which sets up its own carbon market or market-based mechanism for trading carbon. So the EU ETS will also have to position itself against that market. So under Kyoto Protocol, for instance, the credits generated by the mechanisms existing under Kyoto Protocol were actually allowed to be used for compliance purposes in the EU ETS. Now we have a legal question: what about credits generated by under Article 6? So most likely the answer will be yes, they'll be recognized, but still we have to develop the legal framework for that. And again, the task of any policymaker is to assess any potential overlaps in terms of unintended consequences, or which policy can actually boost the other policies and lead to facilitation of the environmental objectives. And the last slide, and very briefly on CBAM, and I already touched upon this, so really this doesn't bring a lot of new content, but just because it is so novel and so actually contentious and so widely discussed around the world. And I shared my opinion at the beginning that I think any mature cap and trade or even carbon tax framework, at some point, the industries that have to compete domestically with the imports of goods that were produced in countries that don't have domestic climate policies, you will start hearing a lot of complaints coming from the industry, and that like climate is obviously a global problem, so that there should be some recognition for the efforts taken domestically, and CBAM is actually a response to that, and a very interesting laboratory, if you will, of combining climate objectives and climate instruments with trade instruments, with taxation. So it's really a mix of all these. And CBAM, even though initially it will apply to just a handful of sectors, but with an idea of being expanded to more and more, I think it will really shake things up globally, especially as, like I said, the countries around the world will start contemplating, well, if money has to be paid anyway, why we shouldn't collect it at home, especially that we are also under obligations to reduce emissions as a result of the Paris Agreement. So the first of the kind, very, I would say, groundbreaking. It was speculated for a number of years that something like that will not be feasible, that it will not be in compliance with the WTO. I think now the consensus is, even with the WTO, it is moving more decisively into integrating sustainability into the principles of global trade, that I think this will pass the scrutiny of the WTO, but obviously we're at this very interesting junction in time where things are in flux, and lots of developments to watch over the next several months. Thank you very much for your attention.
Thank you so much, Kasia, for a very interesting presentation about emission, trading, and etc. Okay, right. I think we can go and move to the second speaker. I would like to share. Okay, all right. Second speaker is Ibu Rizkyasari Yudawinata. Ibu Kiki, that's a nickname I usually call her. Ibu Kiki is a Sustainable Finance Program Lead of WWF Indonesia. Ibu Kiki is also active, provides technical assistance and capacity building to the financial sector at national level in integrating ESG risks and opportunities into business decision. C provided support to the regulator to help the major national banks in setting up their initial ESG integration framework and strategy under the regulator pilot project, namely First Mover on Sustainable Banking in 2016 to 2017. So this is like a momentum for Indonesia to have a sustainable banking regulation and go forward together into sustainability. So Ibu Kiki, the time is yours for 15 minutes presentation. Thank you.
Yeah. Thank you so much, Ibu Juni. Let me share my screen first. Yeah. Okay. Sorry. Thank you, Ibu Juni, and thank you for IAI and ICAEW for the invite to speak at this today's interesting discussion. And hello, everyone. Good morning, good afternoon. Assalamualaikum warahmatullahi wabarakatuh. So, today I'm going to share you a bit on the available carbon market mechanism in several countries, including the countries' target on GHG, the scheme's coverage, as well as the challenges and a few lessons learned to add several information from certain countries. And also allow me to inform you under a disclaimer that this slide does not represent a WBF position nor endorse the material that will be presented. The aim of this presentation is more on to inform the available practices in the market around carbon mechanism that may stimulate and enrich today's discussion. And WBF does not responsible for any misuse or misleading information taken from this material. Yeah, and today's presentations, I would like to take 4 countries as an examples for today's discussions, and where all of them have pledged their GHG emissions reduction and implemented the carbon pricing mechanism that may provide relevant insights into the narratives around Indonesia context. So I try to find some relevant countries such as Colombia, which has similarities with Indonesia, Singapore, our neighboring country, China, and South Korea. In terms of the carbon pricing mechanism and scheme coverage, from this table, I would like to give you an example of countries that implemented both either carbon tax or ETS in terms of the both ways. And from this, we have Singapore, for instance, where they have issued a Carbon Tax Act in 2019 and came into force in 2020. This scheme covered for almost 18% Singapore GHG emissions and applied uniformly to all sectors that emit equally to or above 25,000 tons or ton carbon equivalent. And currently, the carbon tax price for around 5 Singapore dollar per ton, where Singapore itself will review and increase the climate ambition in 2030. And we also have Colombia, in which they have also applied a carbon tax mechanism enacted in 2016, where it covers approximately around 27% of Colombia emissions. And Korea, South Korea, they have not applied the carbon levy, but applies the KETS, the ETS, that was launched in 2015, and it's becoming the East Asia's first nationwide mandatory ETS and the second largest carbon market after the EU ETS. This ETS covers 610 of the country's largest emitters, which account around 70% of the national GHG emissions. And as earlier mentioned by Kayas, an emission trading scheme cap and trade system normally involves the government set quantitative limit, the cap, and the total allowable level of greenhouse gas emissions. And the government distribute the permits, or we call it emissions allowance, to the industry's emitters, either for free or via auction. But in China cases, there is as yet no absolute cap in Chinese ETS. That is its biggest difference with the EU ETS. It applies a bottom-up approach by which all covered companies are allocated their emissions allowance free of charge, and giving the permit or emissions allowance to the specific sectors more than 26,000 metric ton per year of carbon equivalent. And in terms of the challenges and limitations, I think Cassia has also mentioned the a numbers of limitations and challenges of the ETS, and this is the challenges or limitation faced by the these 4 countries. For instance, for Singapore, there are some challenges that are identified from various references, such as the carbon tax scheme. They are still facing challenges of controlling the annual emissions at the aggregate level. And there are also some limitations on the carbon tax itself, where it will be elaborated on the following slides. And the Korean emissions trading system, KETS, it also had to face a number of challenges during the initial stages, the system implementations. According to Korean Energy Economics Institute, that the main barriers of the successful functioning of the system were identified as high transactional cost, primarily caused by a number of participants, domination of the market by some corporate groups, stringent regulations of the electricity generation sector, and high uncertainty linked to fluctuating economic performance of the country on particular sector. And also, according to the WIRE's climate change, China, the National Carbon Emissions Trading Program is also expected to become the world's largest carbon market. Market, and is critical for achieving the China's domestic mitigation goals. But it's likely to face significant challenges due to its large scale and complexity. First is the accuracy of China's emission data have been widely concerned due to inconsistencies between the national and provincial emissions inventories, including the facilities data, for instance. And Colombia, findings from Colombia also indicating that they're currently using the offsets in carbon taxes that may significantly influence mitigation of national emissions, both positively and negatively. So in terms of the carbon offsets, there are certain factors that need to be understood in terms of the ultimate goal of the carbon pricing mechanism in the first place, the environmental integrity, as well as the easiness in doing the carbon mechanism. And these are some of the identified challenges on a business case, mostly from Singapore, on the carbon tax implementations. Some key challenges is around using carbon tax. It's quite difficult to set an accurate tax level that can fully reflect the extra costs associated with the emissions. And another one is that carbon tax puts businesses at a cost that disadvantaged relative to peers that are not subject to the carbon tax. Of those challenges, we also discovered on what Singapore has done. Singapore's carbon tax tries to address those limits of carbon tax in a number of ways. First, they try to minimize direct cost impact on business and households. The carbon tax applies to all sectors whose annual GHG emissions is greater than 25,000 tons of carbon dioxide equivalent. And this limits the coverage of the carbon tax around 40 businesses that contribute to more than 80% of the total emissions. Second, Singapore is implementing its carbon tax in a transparent and gradual way. This allows business time to prepare and gradually lower their emissions. To be informed that Singapore is already planned to increase the carbon price after 2023. And third, the government offers an additional rebate to eligible households to mitigate possibly higher energy costs. And lastly, to help businesses transit to low carbon operations, utilizing from the tax revenue through various financing schemes and instruments. And lastly, the business case on the ETS, where we have seen that Korea has quite remarkable experiencing on a low liquidity at initial stage of its ETS establishment. So in January 2015, KETS, the Korea Emission Trading Scheme, commenced its first operation and no transaction at all. And after that period, trading volume grew extremely slowly too. And by the end of 2015, the total emissions traded on the market reached just over 300,000 tons per tons carbon equivalent out of 573 million tons carbon equivalent. So it's quite far behind the total emissions. And few mitigations that already taken by this country is that there are several important mitigation measures according to various references, including the ADB. That can be taken at preparation phase that might be useful to our country as well, such as the importance to have a good or a major communication strategy and capacity building to make sure that there's a clear and consistent signal to the market. And there's a need also to develop an impact study to the overall financial stability, macroeconomic, as well as to the environmental objective too. And as well as the to take a regular policy review is also deemed unnecessary, and certainly building a coordination between ministries. And yeah, I think it's that's all from our side, and I hope this material can stimulate further discussion in shaping a mature carbon pricing mechanism in Indonesia and beyond, and certainly to build an effective instruments that have a strong environmental integrity that is also has penciled by the government of Indonesia and beyond, and certainly to build certainly also not only to have a strong environmental integrity, but also to apply a proper just transition to bring the ultimate objective of the scheme in the first place, the net zero emissions target towards the Paris Agreement. And here are some references if you would like to know about our work on sustainable finance related spaces. And thank you for the opportunity, and over to Bu Juni. Thank you, Bu Juni.
Thank you so much, Ibu Kiki. Yeah, very insightful. I think there are a lot of lessons learned that we can learn from other countries. And then what's the impact in Indonesia later on? That's the key things that we can discuss later on. Okay, now, ladies and gentlemen, I would like to go to the third speakers. Ibu Kiki, could you please? Yes, okay, thank you. All right. The third speaker is Ibu Oka. Ibu Oka Kusumawardani is currently the interim director of Center for State Revenue Policy, Fiscal Policy Agency, Ministry of Finance of Republic of Indonesia. Prior to serving, now she is also served as a deputy director for international taxation issues at Fiscal Policy Agency. She completed her bachelor degree from Economic Faculty, University of Indonesia, also her master degree in finance from the University of Indonesia. And she has her Master of Public Policy degree from Hitotsubashi University, Tokyo, Japan in 2009. Okay, Ibu Oka, the time is yours for 15 minutes presentation. Thank you.
Thank you, Ibu Jenny. Ladies and gentlemen, all the committee speakers and also all participants, good afternoon, good morning from anywhere you are. Peace be upon us all. In this very good opportunity, I will share the relevant carbon tax policy and the arrangement relevant to that, which is part of the tax harmonization law, which was agreed with the Parliament and was issued in early October 2021. And this carbon tax was introduced as an instrument to support the climate change mitigation effort. Can we go to the first slide, please? Okay, ladies and gentlemen, Indonesia is a country that is quite vulnerable to the impact of climate change. And this is partly because of its geographical positions and also the constellations in the form of an archipelago, and the majority of which are marine waters and stand on the confluence of a continental plate. Next slide, please. Well, in this regard, the government of Indonesia has committed to reduce the greenhouse gas emission by, for example, ratifying the Paris agreements and also submitting the nationally determined contributions document as a global commitment to reduce emissions by 29% with its own efforts and 41% with international support in the year 2030, and also move towards the net zero emissions in maximum in the year 2060. And based on the NDC target, emission reductions are expected to come mainly from the forestry, energy, and transportations, and then in addition to that, agricultural and also several IPPU sectors. With the largest emissions of the reduction target include the energy and forestry or agricultural sectors. All of them, the fulfillment of the emission reduction target in the energy and agricultural forestry sectors actually has covered around 97% of the target set. Next, please. Well, the various fiscal policy to support the achievement of this target have included the provisions in many measures or policy measures. For example, incentives, allocations of spending on climate change mitigation and adaptation, as well as innovative environmental-based financing, both from the government, domestic private sectors, as well as the international support. And those are all within the framework of bilateral and multilateral cooperations as well. Next, please. In this regard, to reduce the greenhouse gas emissions in the last 5 years, the states spending on the climate change has averaged around 4.1% of the state budget. And in terms of the state budget financing, the government has also issued several instruments such as Green Sukuk, which is the government obligation certificate since the year 2018, which are also used to finance, among others, the sustainable transportations, disaster mitigation, waste management, access to renewable energy sources, as well as the energy efficiency. And the government has also developed a climate change fiscal framework to strengthen the sustainability financing, including the achievement of the aims by involving the public and private sector entities at the every time is being improved regularly or continuously. Next, please. In an effort to achieve the emission reductions objective, the carbon pricing policy becomes one of the policy options after various policies previously issued by the government. So there are two types of carbon pricing that are generally applied. One is the trading instruments and the other is the non-trading instruments. Trading instruments can be through trading in emission permits and also through emission offset. Meanwhile, non-trading instruments consist of two types of mechanisms, such as taxes or levies on carbon and the result-based payment or performance-based payments. And carbon tax is one of the carbon pricing instruments from the non-trade side. And carbon tax policy is one of the strategic pillars in implementing climate change policies to support the achievement of the NDC and also the NZE. Next, please. Well, according to the formulations in the tax harmonizations law, a carbon tax is applied to goods that contain carbon and or activities that can emit carbon and cause negative impacts on the environment. But a carbon tax in this regard is not levied on all the carbon emissions emitted by these activities. There are certain limits on carbon emissions that are not subject to a carbon tax. Or there is threshold in this case, or we call as cap for non-taxable carbon emissions. And this cap or threshold for emissions in the implementations part will be harmonized with the settings in the carbon trading markets. And in specific, we use the terminology of cap and trade for this aspect and combine it with the taxation. So cap and trade and then cap and tax. The determinations of the cap in the carbon trading market corridor is in coordination with the relevant line ministries, including, of course, with the Ministry of Environment or KLHK. Next, please. Well, the carbon tax is imposed in connections with the cap and trade, as I mentioned before. It is imposed on the carbon emissions that exceed the threshold or cap. Entities that are emitting more than the threshold or cap will need to purchase an emission permit from another entity that also emits carbon under the threshold or the cap. So as an alternative, the entity purchases emission reduction certificates or carbon offset. In the event that the entity is unable to purchase emission permits or emission reduction certificate for the emissions above the cap in its entirety, the remaining emissions will be subject to carbon tax. And the carbon tax will be collected and administered by the Director General of Taxes. The carbon trading market itself in Indonesia is not really a new thing for Indonesia. Maybe we recall that there were carbon trading pilot projects which was conducted by the Ministry of Energy and Mineral Resources, sometimes back in the year 2021, for the steam power plant sector, or we call it as PLTU. And this prototype is the basis for implementing the carbon market in the PLTU energy sector in the year 2022 and beyond, once it is effectively implemented. By taking into account the components of the carbon emission reduction target per sector in the NDC document, where the fulfillment in the energy sector and agricultural forestry has covered around 97% of the target set, and also considering that the carbon trading pilot project has been carried out by the Ministry of Energy and Mineral Resources in the power sector, energy sector, then the energy sector for power generation is considered as the most ready sector to apply the carbon tax in this regard. Next, please. Well, with these things in mind, first, not all carbon emissions are subject to a carbon tax, but only those above the emission cap or limit. And then second, there is a possibility of offset or reducing the carbon tax liability through the purchase of SIE and SPE instruments from the carbon trading market. Then we can say that the carbon tax, once it is implemented, is aimed for more on changing behavior towards the activities and also processes that are more environmentally friendly, and especially from the lower carbon aspect activities encouragement. So even though there is a potential tax revenue collected, the main purpose of imposing a carbon tax is to change the behavior to switch to low carbon and more green economic activities. It also reflects effort to achieve fairness in sustainable development and align with the context pay principles, where the party that causes pollution or environmental pollution will bear the burden of the cost in the form of paying carbon tax obligations or paying prices in carbon trading market. Next, please. Well, in accordance with the discussions agreement with the Parliament, the carbon tax would initially have been implemented starting April 1, 2022. However, the introduction of the carbon tax in Indonesia is also aiming at encouraging the development of carbon markets, technological innovations, and also investment that are more efficient, low carbon, environmentally friendly. And that is why it is important that the carbon trading and carbon tax be implemented in stages according to the readiness of the MRV system. So currently, the Ministry of Finance is drafting various technical regulations for the implementations of the carbon tax, including the calculations, collecting, paying, depositing, etc., as well as developing the roadmap going forward. But meanwhile, the regulations such as the emissions upper limit for the subsector of the energy, and then the procedures for implementing the carbon economic value in power plants will be determined by the Ministry of Energy and Mineral Resources. In order for climate control instruments to run optimally at the same time, the government is also drafting various derivative regulations from the Presidential Regulations 98, including those related to the management of carbon pricing in AK, and also the NDC at the Ministry of Environment, or KLHK, and the Carbon Economic Value Steering Committee at the Coordinating Ministry for Economic Affairs, Maritime Affairs, and Investment. So climate issue is a cross-sectoral issue And coordinations, of course, will continue to be maintained and strengthened so that the complementary regulations can optimize the government's effort to control the climate change further. The process of compiling a carbon tax roadmap needs to pay also attention to the carbon market roadmap. The carbon tax roadmap will include a strategy for reducing the carbon emissions in the NDC, priority sector targets, alignment with the new and also renewable energy development, as well as the alignment with other regulations which are relevant. And in its implementations, the government will also pay attention more on the right transitions so that the implementations of the carbon tax remains consistent with the momentum of the post-pandemic economic recovery. So taking those subjects or factors into considerations, the carbon tax implementation is then postponed to early July 2022. But despite the slight changes of the timeline, at the initial stage, the carbon tax will still be applied according to the initial plan, which is upon the coal-fired steam power plant, or we call it SPLQ, using a tax mechanisms based on the emission limits, which we call as the cap and tax, where the tariff of 30 rupiah per kilogram of carbon dioxide equivalent is applied to the amount of emissions that exceed the stipulated cap, in line with the ongoing development of the carbon market in the coal-fired power plant sector. And given the importance of the green economy transitions in the impositions mechanism, taxpayers can take advantage on the carbon certificates they have purchased on the carbon market as a deduction from their carbon tax obligations. And of course, the expansions going forward will be carried out in a very careful way, in stages, taking into consideration the development of the carbon market, achievement of the NDC targets, the readiness of the sector, and also the relevant conditions in the economy, so that it remains still consistent with the momentum of economic recovery post-pandemic COVID-19 crisis. And the carbon tax imposition system that applies in Indonesia will also prioritize aspects of fairness, affordability, and also prioritize the interest of the wider community. What about the tax revenue obtained from the carbon tax? Of course, it will be part of the revenue managed in the state budget mechanism, which can then be used to support efforts to mitigate and adapt to the impact of climate change, increase development funds, environmentally friendly investment, or be used to support low-income communities as the urgency of the requirement rises. Well, I think that will be all from me. Hopefully it is sufficient to provide background for further discussions in our sessions going forward. Well, return the floor to the moderator. Thank you.
Thank you very much, Ibu Oke. Wow, we have a lot of questions here. 6 questions already in the Q&A. I think all the speakers can have a look in the moment, and then if you would like to answer directly, please open your speakers and then just answer directly. Or if you would like to answer by typing in the chat box, yes, please, you may do as well. But firstly, I think I would like to ask Kasia. Hello, Kasia. Yeah, there are some questions for you, addressed to you. Yeah, I think from Bapak Robi Ginting, the question to Kasia, how to consolidate if a country choose to impose a carbon market and carbon tax concurrently? And is there any issues or framework that we need to consider before implementing ETS in the power sector, especially for power with a monopoly market structure like Indonesia? And how to make sure the implementation of carbon in power sector cannot bring a safer impact on state-owned utility companies? There are two questions for you. If you may quickly answer the questions, please.
Yes, absolutely. So maybe I'll start with the second one. So power sector is an interesting example because it's quite easy to to capture emissions coming from the sector. So this is definitely on the easiness, or that's the advantage that comes from starting with the power sector. But then actually there is a number of interesting lessons learned by the EU or from the EU experience. And some actually pitfalls that we have encountered specifically, with covering the power sector by the ETS, by the scheme. So the main takeaway from that experience is that in the electricity market, which is a natural monopoly, and that's something that most countries, that's a situation in most countries. What happens is that just because this is a market where there isn't a lot of competition, and the consumers almost like captive consumers in the sense that they actually have to use energy, and they have their energy provider that they are contracted with. So what happened in the EU was that, and the problem was exacerbated by the fact that the EU ETS is actually still giving free allowances. But at the beginning, it was also giving free allowances to the power sector. And so what happened was that the power sector didn't really have much competition. So it was able to, we call it, pass through all of the CO2 costs, or even worse, to pass through the hypothetical CO2 cost. So assuming that they would pay, or they would have to purchase on the market or through the auctions, all of their allowances to cover all of their emissions, even though they were getting a significant portion for free, so something like 50%. So actually this led to a situation that we called windfall profits, where actually the power companies were making money, from the fact that they were covered by the EU ETS, and any cost that they had to incur was immediately wasn't absorbed, was immediately passed through down to consumers. So this is something to consider when designing the system. And even if we don't give away free allowances, still this pass-through issue is something to consider. And this happens in every industry. But then the more globally traded a given commodity is, and obviously electricity is no one of them, the less possibility of a CO2 cost pass-through. But with electricity, we really have to be careful. And I'm not really envisaging a problem for the utility companies, but for the electricity consumers. So any mechanism, any intervention in this space should really be coupled with some form of rebate or financial support offered to the most vulnerable households to avoid what we call energy poverty. So this is specifically on the power sector. And how to consolidate? I think this issue, from what I'm hearing from the presentation on the Indonesian design, I think it's addressed in a pretty interesting way. In what Indonesia is envisaging, where we actually have almost this combination of, you can trade, so you emit up to certain threshold. Above this, you trade. If you cannot purchase allowances on the market, you have the tax imposed. I don't know how well this would work with a cap, because cap basically assumes that at certain point, the companies almost lose a license to operate, because if we have certain cap and the demand for the emissions outgrows the cap or exceeds the cap, there isn't any price point that would let the companies purchase the allowances. And that's also an interesting, when you look into this is also an interesting point in time for the EU, because obviously our cap has been declining for quite some time, first at the rate of 1.74 annually starting from 2012. Now we increased it to 2.2, and actually we're going to yet again bump it up to 4.4 annual decrease rate which is, quite significant. And at this point, we have various analysts looking into this declining trajectory and thinking, well, at which point in time the cap will actually reach zero or close to zero. And many companies are telling us that their concern is about the increase in CO2 prices, but also decrease of the availability of the allowances themselves, especially if we let non-compliance entities participate in this market. So I'm not quite sure how we could address declining cap if we give the companies an option to buy in, to purchase their emissions in the form of tax. So this is something to consider, but that's, in essence, that's an interesting mechanism. So this is my comment. And I haven't seen this combinations. I haven't seen those two instruments fused in one. If anything, I gave you the example of the EU versus member states, where the tax, if the company sort of underpaid purchasing the allowances, they can pay the additional tax, but the cap still goes down, and so it's only paying the difference. It's not replacing one compliance obligation with another form of meeting that compliance. But I'm happy to hear other thoughts and comments on that.
Okay, right, good. I think to think about the questions number 2, we have to escalate to the government and then how they work together, Kasia. If not, I think that some of the company will be suffer, some company will get the benefit. I think the movement should be all together at the same time. What do you think?
Well, so if we apply ETS or carbon tax in sequence to all, to the given sector, let's say we start with the power sector, there won't be really anyone disadvantaged, especially even when we look at the international landscape, because electricity is not internationally traded. And when you move to other sectors like heavy industry, the main question wouldn't be, I would say, the competitiveness issue domestically, but rather, international competitiveness. This is something that we want to address with CBAM in the EU. You can have some issues domestically if, let's say, one company has an advantage in terms of their carbon footprint is lower when it comes to their production process, and so their exposure to ETS or carbon tax is lower. But I think this is fair when we consider that they usually have to invest really to reduce their carbon footprint. So I think domestically, I don't really, in the EU, we didn't really have the issue domestically. It was always with the competition coming, from outside of the EU. The only problem we had in the EU when it came to, companies from the same sector was if one country was offering certain, exemptions for their energy intensive industries and the other EU member state wasn't. But in the absence of that, the EU ETS didn't really lead to diverging situations for the companies from the same sector.
Okay, I think the situation may be different for each country, especially for Indonesia. Yeah. Okay, let's move on to other questions. We have 8 questions here. I'm trying to give some of the opportunity for speakers to answer all of these questions, if possible. All right, the next one, I want to go to Ibu Oka. Ibu Oka, there is a questions, very quick questions here. Any cap or trade market concept has been done by the OJK? And is there any chance for credit carbon from palm plantation?
Yeah.
Yes.
I think in this regard, well, I thank you for the questions first, and then perhaps would like to raise the awareness of this, because this is relatively a new thing in Indonesia. Carbon market, as you know, that it is not really developed in Indonesia, and the introductions of the carbon tax is also still in the process. The OJK, I think they're also still doing the preparations in covering this aspect, and the cap and tax things, cap and trade things for the transactions in the carbon market. The introductions of the carbon tax and the mechanisms of cap and trade is actually initiated based on the way that it has been conducted by the Ministry of Energy and Mineral Resources back then in the year 2021 on their pilot project for the emission trading system, especially for the PLTU sector, where there were around 84 power plants units that are becoming the participants in the carbon market trial, totaling to the capacity around 27 gigawatt and emitting around 165 million tera CO2. And this piloting cap and trade was carried out in the period of March and September 2021. During that pilot project, there has been carbon transfer transactions successfully done, totaling up to 42,000 tons of CO2 equivalent in a trading scheme with an average of carbon price of $2 per ton of CO2. So I think this could provide a bit background on whether the similar mechanisms of cap and trade has been done in previous time in Indonesia. Yes, it has been done, but in terms of the pilot projects introduced by the Ministry of Energy and Mineral Resources back in the year 2021, especially for the PLTU energy sector. For the remaining, I guess the process is still undergoing. And of course, we expect that everything runs smooth because based on the presentations made by the first speaker, Kaisa, we understand that there are many challenges for a country in introducing this scheme, including carbon market, as well as the relevant carbon pricing mechanisms. I think that would be my answer. Hopefully that answered the questions. Thank you.
Okay, thank you, Ibu Oka. There will be another interesting questions here talking about the coal. Why coal fuel not charged of this tax for home or export? What happened, Ibu? Do you know what happening?
Yeah. Well, yeah, I think these questions also relevant to the previous answers that I gave just now. So this is actually a new measure introduced by the government, and the one thing, the one sector that has been seen quite ready is the PLTU sectors, and of course. The expansions on the fuel product, we talk a bit different segment on this regard. So when we are talking about the fuel, then we talk about the final products. But then when we talk about the PLTU sector, then we talk about the more on the upstream level of the production process. So of course, when we conduct the taxations on both segments, then we need to be careful on whether it has implications on, for example, the burden on the overall product from end-to-end process. That's why the expansions on sectors is really carefully reviewed and developed by the government. We are not still finalize our roadmap going forward, but that was one of the implications of being careful on that. So I think it's not limiting the possibility going forward, but then careful attentions on this need to be taken. Thank you.
Okay, right. Yeah, okay. Thank you so much, Ibu Oka. Before I come back again to you, Ibu Oka, I would like to go Ibu Kiki. Ibu Kiki, if you don't mind, would you like to answer these questions? If my company is a group with many subsidiaries, is it okay to state the carbon tax for a group in the financial report? Maybe this is a question, do we need to separate it, the disclosure of the tax, or maybe put in a one group of a company, big company? What do you think, Ibu Kiki, according to what you learn from other countries?
Yeah, thank you, Bu Juni. I think if one group, it depends. If these are subsidiaries, it depends on the reporting that they are currently doing. But commonly, the reporting should be addressed to the each unit of the company itself. Then it will be aggregated to the overall reporting company. Yeah.
Okay, right. So once of each subsidiary need to report themselves, yeah, and then aggregated and cumulated and consolidated in the group, Ibu, yeah. Okay, good. All right. If you don't mind, Ibu Elaine, yeah, I would like to ask the questions from the audience about the positions of the financial, and then some of the auditor. Yeah, okay, interesting questions here. If you don't mind, Ibu. Yeah, okay. Yes, this one. For the global economy, this would be definitely at the pressure to margins of the energy segment. In the meanwhile, they could only achieve carbon neutrality through carbon offsetting. Would you see this carbon tax would continue to move the global economy? What do you think, Ibu? Do you think so? Do you would like to give some of the opinion or view about this? Or maybe I can back again to Cassia.
Yeah, so for carbon neutral, maybe let me start with this one. Yeah, carbon neutrality for, oh, sorry. So would you like me to answer or?
Yes, Cassia,
yeah,
go ahead. Yes,
okay,
go ahead, Cassia.
Yeah, I'll share my perspective. So yeah, so when we talk about carbon neutrality, climate neutrality, obviously this is, a big challenge for everyone. And there are sectors with a high share of those residual emissions that are really high to abate, and for them at this point in time and at this level of technological development, yes, that's true. Probably offsets are the only way to go. For the power sector, I'm way more optimistic. I think carefully designed energy market that uses renewables, that uses energy storage, that may be at least transitionally some form of capacity market to make sure that we have those conventional power plants on standby, be able to kick in whenever renewable power is not available. So electricity, I'm not that concerned about. But then when we think about hydrocarbons, for instance, the oil and gas, as long as we keep using those fuels, obviously carbon neutrality for them is way more difficult. And here is where offsets come in. And this is one of the reasons why we see this explosion in the interest in voluntary carbon markets, because this is how companies can balance their, let's say, emissions inventory. The problem then begins when organizations like, for instance, Science-Based Target Initiative, they have recently said that if anyone is making claims about carbon neutrality, offsets can only constitute up to 10% of their emissions. So this is something to be navigated. But yeah, the electricity, again, I'm way more optimistic than other heavy industries in terms of decarbonization. And then would you see this carbon tax continue to move the global economy? Well, in the sense, yes, because we're creating new markets, new commodity. So in that sense, yes. And then definitely another way of, looking into moving the global economy is, I think, to really look into, are we actually able to achieve sustainable growth without extensive use of natural resources? And if so, if through these policies, we are actually able to prove that, I think this would be something that I would definitely consider moving the global economy. So letting it grow without really depleting the resource. I think this is the end game here, and there is a role for carbon tax to be played in this journey.
Okay, thank you, Kasia. I think the same question I can go and then ask Ibu Kiki to also share your opinion about carbon offsetting, Ibu Kiki.
Oh yeah, thank you, Bu Juni. Yeah, in terms of the carbon offsetting, it's commonly used as the last resort. If, for instance, not technology allow them to transition, and this is also aligned with some of the principles, such as from the IFC principle standards and other international standards. And carbon, we need to back to the ultimate goal or objective of the carbon pricing mechanism, where the objective is to change the behavior, as also mentioned by Ibu Oke. And in order to steps to the transition, and hence there's a need to provide an awareness of the need to the energy transition to the industry, to give a clear messaging and to enable the industry, the businesses to prepare a necessary action plan. So yeah, I agree that a prudent and meaningful roadmap also need to be taken. Yeah.
Okay, thank you so much, Ibu Kiki. Actually, there are some of the questions addressed about how the role of accountants. Does any panelist would like to answer how the roles of accountants, like addressed by Charlie Budiman here? I think accountants must have a big chance on documentation of the transaction. Now all the companies in Indonesia still using the old documentation. How could we change for this kind of transition between the previous documentation and then try to adopt this kind of transition about the taxation? That's a very big challenge for the accountant. Yeah. Yeah, I have Ibu Ellie here if you want to, but if you don't want to, I would like to offer any of the panelists would like to give some of the opinion, maybe from Kasia as well.
Mm-hmm. Yeah,
Yeah.
so accounting and taxation, yeah, these are big challenges, and especially if we consider this split between compliance and voluntary market. So there are accounting principles, and there are, I would say, well, pretty well agreed upon tax implications when it comes to compliance credits. They are usually considered financial instruments, etc. There is a bigger confusion when it comes to voluntary credits, because they don't serve the same purpose. They, are not regulated. There's no governance around them. So we have been asked that question, not me specifically, I'm a lawyer, but my colleagues from our accounting arm, and there isn't really a consistency among various standards and then various jurisdictions. I think the starting point is always around the legal definition, what those carbon offsets are. And I have seen such a variety of approaches. Like one country, for instance, defines carbon offsets as a marketing service, so obviously we will see different accounting and tax treatments that follow these divergent legal definitions. But for sure, we'll be moving into something more, consistent and harmonized.
Yeah, okay. So accounting standard also facing a very big challenge to look at this kind of transition. Yeah, Kasia, mid-time, yes, it's still undergoing, then we are going to move together for that. Yeah, I would like to back again to Ibu Oka. Ibu Oka, there's very interesting questions here about this carbon tax addressed to a specific industry, which influenced by the mineral resources. Is another industry that cannot connecting with also should apply this carbon tax? What do you think, Ibu Oka?
Yeah, thank you, Bu Juni. Well, yeah, I think I have mentioned before that this introductions of the carbon tax is, yes, it is still limited to certain industries, especially only one sector actually will be targeted at the first phase of its implementation, which is the PLQ sectors. Because of several considerations that I mentioned before, of course, the expansions of including the additional sectors is not limited. But then still the strategy for expansions will, of course, take into considerations the achievement of the target on the NDC, for example, and then alignment with the relevant strategy on the renewable energy development, for example, the sector readiness, the economic factors that remains happening at that time and needs to also be consolidated continuously. So I think, the answer to that is perhaps we wait for the roadmap going forward. But please bear in mind that in order to establish the roadmap as well, the government pays very careful considerations on that, so that the burden, the implementations of the carbon tax can be as much as possible just and also affordable to the relevant parties. Ibu Juni, I think
Yes.
another, if I may, I have a comment on that role on the accountant.
Yeah, accountant. Yes, accountant.
Yeah, because
Yes, Ibu.
well, basic understanding and the very important role of the accountant, among others, is to provide as accurate as possible, as credible, reliable as possible, the reporting, and also especially for the reporting part of the relevant data in the relevant reporting requirements. I think there is a big role that accountants can make under this aspect. One is perhaps seeing again the accounting standards that has been mentioned by Kaisa and also Ibu Juni previously, especially when we rely on data in calculating the tax itself and in ensuring the compliance of the implementations part, especially when we do the calculations, the reporting, compliance on the relevant regulations. The critical role of the accountants is there. So keep on those roles very much reliable going forward, and that will be providing big contributions to the implementation of this carbon tax going forward. Thank you, Ibu.
Yeah. Okay. Thank you, Boka. Yes, I think as an accountant now we have to develop a new subject for carbon accounting and also carbon tax accounting as a part of the accountant curriculum. Yeah, Ibu. Okay. All right. Yes, Ibu Kiki, would you like to answer a little bit about accountant role, Ibu, in this carbon offset and carbon emission?
Yeah, I would like to share a bit that the IFRS, the International Financial Reporting Standard, is currently developing the cap and trade transaction for the accountant. So it's definitely something is coming up. And also the role of auditor is also a key to understand the credible framework in identifying whether this is a credible offset mechanism. Yeah, thank you.
Yeah, thank you, Ibu Kiki. Yes, there are some more questions actually here, but I really want to answer questions for this one from Ibu Oka about the pricing, Ibu. I think this is very important questions that if you don't mind to answer, very quick answer. Questions for about what actually the rational argument to quote the price of carbon trading for 30,000 for Indonesia. Yes, Ibu.
Yeah, thank you, Ibu Juni. That question is quite an important question because in the harmonization tax law, if we put a bit more attention on the draft of regulations, it stipulates there that the carbon tax rate is imposed equals to or above the carbon price in the carbon market. So the minimum rate is 30,000 rupiah per ton CO2 equivalent, but then it can be reviewed and revised going forward based on the development of the carbon price in the carbon market in the future. Why is it like that? Because the carbon tax is introduced not only to direct or to change the behavior of the relevant stakeholders towards the more greener and environmentally friendly activities, lower carbon activities, etc., but also to encourage or stimulate the development of the carbon market activities that we all know and up until now is not really developing. So the price of the carbon tax, we call as the carbon tax, the rate itself is expected to be encouraging as well the development of the market in the carbon market. So it has, ideally, it has to be similar or higher than the price in the carbon market. In previous explanations, I refer to the first implementations of the carbon tax is limited to the LTU sector, which was also based or referred to the pilot project conducted by the Ministry of Energy and Mineral Resources back then in the year 2021. At that time, the transactions of the carbon market, the trading between those participants involved is or was conducted at the rate of average $2 per CO2 equivalent, which if we would like to convert it in rupiah, is almost the same with the 30,000 rupiah. But then, because this is the new intro drug-free measures, then we will see. So it's like the first rate introduced, but then we will see what would happen in the mechanisms of the carbon market itself, carbon trade, and the carbon tax itself. The involvement and the result based on those two involvement would be the base of revisions or review on the next carbon tax rate. So it's not static. It can be revised afterwards. Thank you.
So it is still developing, Ibu Oka, yeah? Okay, all right. Thank you so much for all the panelists and also the presentation, very, very insightful. And I would like to apologize for the questions that we are not able to answer all of this because of the limited of time. I think once again, thank you so much for all the audience for attending this very good sessions. I would like to offer back to Pak Andika.
Thank you, Bu Yeni, for leading the session. And I would like to also thank you all the panelists, Kasia, Ibu Oke, as well as Ibu Kiki for sharing your insights. Ladies and gentlemen, as mentioned earlier, you can claim your e-certificate for today's webinar by filling the link shown on your screen. So please make sure that all of you who wishes to get your e-certificate, I'm going to check with my colleague to please click to the next slide. Yes, While we wait, all right. So while we wait for the slide, I would like to let you know that when you are filling up the link to the online form, you will also need to choose the right keyword. So please make sure that you listen carefully, that the keyword for today's event, out of the 4 options, the right one is carbon tax and emission trading scheme. Once again, the keyword is carbon tax and emission trading scheme. I'm going to share the online form on the chat box, so it's easier for you to follow. Give me 1 second. There you go. You should be able to see the link to the online form. Also be reminded that this link will only be open until 7 p.m. Jakarta, so you only have limited time to complete the form to claim your e-certificate. We also like to inform you that when we distribute your e-certificate, you will also be receiving the materials of the panels for today's session. So once again, I will repeat the keyword for today, which is carbon tax and emission trading scheme. The keyword is carbon tax and emission trading scheme. So there are different options. One final time, the keyword is carbon tax and emission trading scheme. Bapak Ibu, on behalf of the organizing committee, ICAEW and IAI, we thank you for your participation. We hope that you gain a lot of valuable insights to move forward with your respective climate change agenda in your professional role. We also like to thank the ASEAN Federation of Accountants for supporting this event. We see some attendance from our fellow chartered accountants in the region, so that's always good to know. So on behalf of the team, I would like to wish you selamat berbuka puasa and see you at our next event. Assalamualaikum warahmatullahi wabarakatuh.
Thank you, Pak Andika. Thank you, Bu Oke. Thank you, Bu Kiki. Also, Kasia, for attending and becoming the speaker today. Thank you also, Bu Juni, for becoming the moderator. See you all.
Thank you, Pak Edward.
Thank you, Elaine, as well.
Thank you, everybody.
Bapak
Thank
Ibu,
you. Bye-bye.
Bu Juni,
Thank
Oke,
you, Bu Kiki, Bu Oka,
weekend.
Kasia.